All right, guys, back to work tonight. Weekend's over. Hope you guys had a fantastic weekend. Hope you got some rest. Got a busy week ahead of us. It's Monday evening already. We're getting ready for Tuesday's trading session. Got a lot of good movement on the charts today. Get some great trades setting up for Tuesday. I'm going to cover all my favorite trades in tonight's video. That we get a game plan to make some money tomorrow. Before we jump in and get this party going, I think a lot we're going to cover here in tonight's video. Before we jump in, though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload, so make sure you subscribe. And as always, if you guys enjoy the video tonight, if you enjoy the content, do me a favor, will you hit that like button for me? I appreciate you guys supporting this YouTube channel. But enough of the intro, right? Where's the money to make on Tuesday? We got Fed coming on Wednesday. Tomorrow's a big day, right? Tomorrow's a big day. Boy, everything looking pretty bullish here. You can see in the charts here tonight. Strong move up on the Nasdaq, strong move up on the S&P, pretty much strong move up on the crude oil. So, you know, anytime we have strong moves in one direction, we know we're looking for some pullbacks, right? Looking for some pullbacks here, pretty much on all three of these markets here right now. We do, though, have a long-term bear trend right now. We might be bullish in the short term right now, but I'll tell you, the long-term bear trend says we have to be looking for some reversals here for tomorrow. I would love to get some double top reversals across the board. This one market, though, I'll tell you, the oil, right? Oil is the one you really got to be careful with those double top reversals for tomorrow. I'll talk about why I say that and why I might be a little bit more bullish on the oil than the Nasdaq and the S&P. So we'll talk about why I say that and how you guys can make some money tomorrow on both the buy side and the sell side here on whichever one of these markets are your favorite. Now, speaking of tomorrow's a Tuesday. We don't have a lot of major news for tomorrow. There's this housing starts tomorrow at 8:30 Eastern time. I wouldn't think that will be the big news for tomorrow. I would expect there'll be some other headline. Maybe it's from OPEC. Maybe it's out of the war in Ukraine. We're not going to hear any Fed speakers tomorrow because we get the Fed announcement on Wednesday. So the blackout period is in effect right now for any of the Fed speakers. So I doubt we're going to get much of a reaction to that housing starts tomorrow. Everybody right now is looking forward, or maybe not looking forward to, but looking ahead to the FOMC announcement coming on Wednesday. Usually that Tuesday before Wednesday's big announcement, usually there's not much major news, and usually it's something that we don't expect. So I will definitely have my news feed running tomorrow morning in our trade room. Will it be something out of OPEC? Will it be something out of China? Will it be something out of Ukraine? Will it be something crazy that our President Joe Biden says overnight? I don't know, right? That's something we're waiting for, and hopefully we'll get a nice little catalyst out of that here for tomorrow. So not a lot of news in the schedule. And just kind of keep in mind for tomorrow afternoon, late in the day tomorrow, right? Late in the day tomorrow, you're probably going to see stuff start to thin out. Liquidity will probably drop a little bit as traders begin to kind of buckle in ahead of that big announcement coming. What is expected to be a pretty significant rate hike on Wednesday. One last thing to be aware, there'll be no newsletter on Thursday this week. Last minute something came up over the weekend. I got to be out of the office on Thursday afternoon. So no newsletter on Thursday afternoon. Not to worry, that we'll be in our trade room all week as always. So if you're a student of mine, if you're a student of our trade room, I got you covered. But there will be no newsletter, not tomorrow, but Thursday afternoon. So keep that on your radar. I hate to leave you guys hanging on that, but you know, sometimes love comes at you fast. You got to react to it as best you can. We're back to our charts though. The money is on the charts here for tomorrow. Nasdaq, S&P, crude oil, or the QQQs, the SPY, the USO, right? Whichever market you trade most. Make sure you watch all the way to the end of this video tonight, guys. You'll learn something new throughout the entire lesson this evening. I'll provide different trade ideas, different strategies to consider, and I do try to save the best stuff all the way to the end, so I'll give you a reason. Stick around all the way to the end. Why don't we grab the NASDAQ or the QQQs, right? A lot of my students right now trading the NASDAQ, the micro NASDAQ, the QQQs. Now, keep in mind, guys, this is a 4,000 tick chart. You can always see time frames in the upper left-hand corner. And remember, the NASDAQ and the S&P are pretty similar, at least right now they are. So you can kind of interchange these, right? What applies to NASDAQ can apply to the S&P and vice versa. Guys, there are 3 three key insights right now that tell me where the best money-making trades are probably going to be for tomorrow. The first one we mentioned earlier is a very strong move higher. Why is that important? Well, anytime we see a strong move in one direction, we expect buyers to be waiting to buy a pullback and a retest of that high. Now, once we get a retest of that high, do we get a breakout going higher, right? Got some levels we'll talk about here up overhead. Do we see a breakout going higher, or do we see one of my favorites, those double top reversals? Because after all, we are a long-term bear market right now. Bottom line is, strong move higher says you have to expect buyers to be waiting for the pullback. And at the same time, right, we definitely anticipate there might be some bears coming in at that high. Second clue here is a range breakout. Now, why would a range breakout be an important clue? Well, as we saw in the middle of the day today, we kind of had that range brewing, right? We got that very classic 1, 2, 3 breakaway move. Why is it important? Well, oftentimes whenever we see a strong breakout, the market's going to want to, well, buyers are not going to want to buy high. They're going to want to buy low. And so we start to think about, okay, about that high, that high, that high. This whole area now kind of becomes ripe for what you call a breakout pullback, right? So breakout, pullback, and you'll notice here, I get a couple great levels, right? Got that channel level on there, that prior high level. So, you combine that strong move with a range breakout. You start thinking, okay, buyers are probably looking for that pullback somewhere right around some of those prior tops, just above that trading range. And then, of course, the third piece of the puzzle, right, is that long-term bear bias. Look at a daily chart. Look at a 4-hour chart. We are definitely short-term bullish right now, but we are long-term bearish. Why does that matter to me as a day trader? Well, because, like I mentioned before, we would expect there, because of that bear overall bias, we would expect those buyers to look for the long, right, but then possibly see bears come in and crush it off that high. We saw something similar, move up, right, retest, and selling it off that, right? So that's kind of the idea behind that long-term bear bias. I would also imagine, too, that this could turn into possibly like maybe a V-top of some sorts, right? So we're looking for a pullback, but the pullback never ends up getting bought, ends up rolling back over. And so I want to make sure we're prepared for a short on that, right? If the buyers don't come in and buy that pullback, I want to make sure I'm ready and make sure you're ready to make some money on this thing as it starts to make its move back down into that range, because of course that range, of course, will act like a magnet. So anyways, we have all the clues are laid out right now. How do we make some money on this? Well, you really got to think the buyers probably have a couple entries on their radar right now. This right here is a great setup pattern. We call this a 2-try breakout. Strong move, shallow pullback, higher high in price. If you're a student of my trade room, you know how much we love these trades, right? We call these 2-try breakouts or a 2-try trap. These are very, very specific, right? Strong move, shallow pullback, higher high in price, a nice strong juicy signal. That is the most aggressive way to buy this, but you have to think though, again, buyers are looking for some way to buy that first pullback and take it higher. On that trap entry, on that 2-try trap entry, take a piece of profit off at that high. And then where does the market want to go here if it really gets what it wants for tomorrow? It's going to want to take out that 12,150 3/4. And if the buyers really, really get it good tomorrow, they'll run all the way up into that 12,268 3/4, down to that 12,220. If I had to guess where buyers would love to be, or should I say where sellers would love to be before the FOMC on Wednesday, it's right there. I would imagine that 12,268 to 12,220. There is a comparable level for that on the S&P as well. So we definitely have some targets waiting up overhead. Another one I'm looking for here for the NASDAQ, and again, this will be very similar here on the S&P. Let's say, for example, now we don't get that nice juicy signal candle. And remember, guys, you always want to get a signal whenever you're doing stuff like this. We'll talk about signals in that free trading class, right? Which a lot of you guys have taken on our website. But listen, what if we keep going lower? If we keep going lower, this would really kind of be the ideal pullback area, because now we're really into some of those prior highs. We've got this channel, this bigger channel coming down. So I really like that area down there, 11,960 and 3/4 at the lowest. I shouldn't say problem. The good part about this is that if we get that deep pullback now, what do you think the chances are that everybody who knows we have a bear bias, right? Don't you think a lot of those sellers now will come in and try to sell that pullback right here? I hope they do. I hope we get a lot of bears coming in and trying to sell that pullback. The reality is we are overall long-term bearish, but that's a very strong move higher. We're at major levels of support, right? Yeah, that's not a very good short, not yet at least. I'll talk about how to sell that here in a moment. This is not a very good short though, at least not regarding probability-wise, right? Probability, not a very good short. What I'd love to do though is get some of those traders to get roped into that short and then think about where their stops are. Think about where their pain is. Think about where those sellers have to then get out and become a buyer. And that's exactly what you're looking for. This potentially could be a failure into a pullback combination, right? Failure into pullback combo, right? We trap in the bears below the moving average, and then we try to grab that first pullback off the EMA. Again, take a good chunk of profit off at that high, and then think about that 12,150 area. That could be a target. Also, too, a lot of times, that breakout leg can be used as a measuring leg. So we'll know more of where that is. I really like that failure into pullback combo at the low of that channel. These are the same entry combinations, the same entry pattern we talk about in that free trading course, which reminds me, I know that most of you guys have taken the free classes. You've learned all the traps, the failures, the pullbacks. I get so many great emails from you guys making money on that stuff on your own account after only the free courses on our website. But listen, if you haven't taken that class yet, if you're one of the few, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take the free trading course. The strategy that I teach in that class will get you into so many more winning trades, help you easily start avoiding losses, and most importantly, it'll give you a ton of confidence because you'll have a roadmap to follow, the same roadmap we use every day in our trade room. If you're missing too many good trades right now, if you're taking too many losses, take that free trading course. It's perfect for someone trying to transition into full-time trading. So definitely grab that link that popped up there. You're going to love that free class. Now, let's keep going though. So now we know how to buy it right on the pullback, and a couple options here to buy it on the pullback. We have a long-term bear bias. What you want to keep in mind here on this is if let's say we pull back now, but now instead of getting those bears roped in and buying back up again, now the market begins to chop and chop and chop. This will happen because, again, you got to think, right? There could be a lot of bears that are selling into this thing as it goes higher because, again, it's a long-term bear market, right? So it may end up completely reversing right back down. Where I'm going with this is if we don't get that long entry right off of that low and we begin to grind down, that's a very, very big clue. I'm going to mark off a trend line off that low. I'm going to bring it up around the high, right? Makes sense? See how I draw that almost backwards? And then what you want to do is you want to go out and find some prior swings. Okay, get above that prior swing. One of those prior swings, get above the prior swings, get above the moving average. When I go above a prior swing, it allows me to use what I call a trap entry. When I get above the moving average, hopefully buyers will come in and try to buy it. If they try to buy it, we can use their stop losses as fuel with a failure entry. Okay, this is my favorite types of reversals. It's basically a pop and grind channel. We pop down, we grind down. That basically tells me buyers have walked away. If I can get that short off the high, where do you think's a good target? That's pretty easy, right? Down at that low, right? So we could take it out that 11,800 off of that low. All right. So now I think we're doing pretty good here now, right? Now we know the shallow pullback trap, the deeper pullback, the failure. We know what happens if this thing kind of rolls over and plays dead, right? And rolls lower here. I got a couple more questions though for you. We still have a lot more to think about here tonight. So what if we go higher here? right? What if we go higher? Oh, and by the way, what if we do get that pullback? They do take, like, how do I sell off that high? Because again, that could be the best trade of the day tomorrow. That could easily be a great winning trade off of that high. And then wait a second. What if we go all the way back to those lows? Could I buy off that low? Can I buy down here? Because after all, there's a range right in the middle. That's a major low down there at 11,780. So how do I buy off that low? How do I sell off the high here? Those are all really important questions. Those are money-making opportunities for us tomorrow. Let's keep going here. Let's grab a look at the S&P 500, the ES, or the micro S&P, or the SPY, or the SPX, right? It's all kind of the same. There are three basic key insights right now. They are all pretty much the exact same thing here as the NASDAQ. So we talked about, right? We talked about how that strong move higher says expect a pullback and a retest. We talked about how that range breakout says keep an eye on those areas because markets love to break out, pull back, and then go, right? And again, we talked about that bear bias of how we got to be ready, right? Be ready for that double top reversal, be ready for possibly a full-blown reversal going lower. So not a lot is different there on the S&P. The S&P, the buyers, of course, they would love to get up on the 39.63 half. And of course, if the buyers were got what they really want this week, right, or tomorrow before the FOMC, you would think that 39.83, 39.77, you would think that area is kind of the objective right now the buyers would like to get to. The bears, of course, they got a pretty easy job, not easy job right now, but we know where they want to go. They want to go back down and take out those lows, right? Those are the same lows from last Friday as well. So pretty simple game plan here on the sell side. So first question is though, what if we keep going higher here? You know, because that's, I mean, come on, right? We got a Fed announcement on Wednesday. Would it surprise anybody if this market walked itself higher right as the Fed announcement comes out and then dumps it right back down? I don't think anybody who's been around the business for a little while, I don't think anybody would be surprised by that. So what you want to think about right now, though, is the higher this market goes, the less attractive it becomes to buyers. Okay, because we want to buy low. So for example, right now, I like the idea of that trap because, you know, relatively speaking, we still have quite a bit of space going higher here, right? There's still quite a bit of space there. But let's say now, though, we open up in Asia, the market runs higher, and now all of a sudden, now we're way, way up high, right? Now we're way, way up there. Let's say, for example, right, let's say the market now really keeps on pumping higher. When that happens, we want to start thinking about, okay, as we go higher in a long-term bear market, we have to be careful chasing the market higher because, again, bears are going to be waiting. So what we're doing is I'll be looking for something like this, right? One would be looking for maybe another channel, right, drawn off the highs and then brought down to that low. Okay, the bottom line is the higher we go up, the deeper the pullback I'm going to want to get, the less aggressive I'm going to want to be. If I could kind of do it my way tomorrow, if I had it my way tomorrow, this would be something a lot about how we get, right? We get some sort of push up, some shallow pullback, and then sometime, you know, middle of the morning tomorrow, get that nice deep pullback. How deep? Deep enough, you know, again, I'm looking for, you know, a channel off that high, right, down to that low, right? We're drawing channels off the highs here, and I'm trying to be very patient to wait for that relatively deep pullback. Deep enough to get down to the low of that channel, and also deep enough, hopefully, to try to trap in some of those bears. Right? I'm hoping that a lot of the rookies are going to look at this and say, okay, long-term bear market, strong move lower. We must be going lower, right? Remember, anytime we see a strong move like that, it's just begging to get retested. So the higher we go up, especially without any meaningful pullback, wait for that deep pullback, trap in those bears, right? Think about now where their stops are and buy right into those stop losses, right? A failure, or again, as I mentioned earlier, that failure into pullback combination, right? Failures below the moving average, pullback above the moving average. And one thing you want to be aware of, that pullback combination, you really want to get into that pullback combo. I call it a combo because it comes after that failure. It's very common. You'll learn more about that in that free trading course. You want to make sure that pullback entry, especially in this situation with the long-term bear trend, you want to make sure that is really at or below the 50% off that high. Right, makes sense, because that's going to make sure we have at least a good balanced risk-reward ratio. If I can keep my risk-to-reward ratio balanced, I'll be more chances of making money in that trade than if not. Okay, so think about as the market goes higher, we start thinking about, okay, find a bigger channel. Why a bigger channel? Because I want to get deeper pullback. Why deeper pullback? Well, because long-term bear market, we want to really get low. We'll be trapping those bears with that failure, with that pullback combination as we go. So keep that in mind. And again, the big thing there is don't chase it as it goes higher, because as it goes higher, it's more likely for a sharp pullback there. Now, let's keep going. Let's say now, put this channel back on. I'm going through some other options here right now. Let's say now we get that deep pullback, we trap in those bears, we get that failure, and we run those stops right back up to retest the high. Now what? Now, can I sell it right now? Not exactly. I'd like to sell it, but I have to see, well, there are three things, right? Three things we look for a reversal. What are they? What's the first one? The first one is you have to be at a major turning point. All right. We don't look for reversals at just anywhere. So you have to be at some major turning point. The second thing is you want to see signs of exhaustion. Okay, now my definition of signs of exhaustion is the 2-try rule. I want to see buyers trying once. I want to see buyers trying twice. Now remember, buyers want to buy low. So when they're buying once and twice, you want them to buy at a lower price. Not to worry, we'll learn a lot more about what I call entry counting in our video classes. You want to see some signs of exhaustion. Let the buyers try a couple times without punching through that high. The third thing we need for a good reversal is going to be some sort of catalyst. Okay, so major turning point, signs of exhaustion, and then some catalyst, something that gives us an edge. Because remember, at this point, we're not a bear market right now. We're a bull market at this point. I know we're long-term bearish, but we are day traders. The short-term momentum, the short-term trend is our best friend if you want to make money every day with any strategy that you're a short-term trader on. So I need to have some stops. Right? So one of the things I always teach my students in our trade room is think about where those stops are and look for that short right into those stops. Now, as we go lower, okay, again, this is a failure pattern, but it's called a 2-try failure. Why 2 tries? Because we're bullish, right? I like the reversal, but I have to wait for us to get the turning point, signs of exhaustion, and then hit those stops, okay? Now, once the market begins to roll over, okay, once we start to roll over here, we get that nice juicy signal candle. You'll learn more about signals in that free video class, and the market rolls lower. Now, where does this market want to go? It's going to want to go back and take out some of these lows down here, right? Get a big range right in the middle. Oftentimes what happens is the amount we go above a range is equal in the amount we go below the range. Okay, it's going to keep that in mind there. You got to think, though, the bears have, they get 2 levels in their mind, right? They want to take out that low, take out that low. If we can get this thing to fail off the high and begin to roll over, now the fun begins. Now we can go out, we can draw a trend line off that low, draw a channel off of that high. We can drill down, and this is a 10,000 tick chart here on the S&P 500. We can drill down to a much faster time frame, and we can pretty much get whichever entry pattern we can find off that high. I like traps, above a prior swing. Inside that free video course I mentioned earlier, you'll learn about traps, failures, pullback combinations, strength trades off of that low as well. So kind of keep that in mind, right? So if we do get that pull back, that retest of that high, we see buyers come in now. Remember, these are the rookies, right? The professionals are buying low. The rookies come in. They try once, they try twice. Think about now where their stops are, selling here into their stops, turning point, signs of exhaustion, right? Catalyst with stops. And then if we can get that strong run lower, now we know the market turning over here for the bears. And now we mark off that low. We find a channel off that high. One of my favorite trades. I always tell my students, sometimes we may not get a great reversal signal sometimes. The market sometimes doesn't give it to us, or maybe you're new to this stuff and you don't feel comfortable yet with shorting off that high. I get it, but you don't want to miss this follow-up though. That follow-up's a much better trade now because momentum has turned. I shouldn't say much better trade. It's a much more obvious, it's a much more reliable trade because momentum now has turned. The buyers already got their retest that high. I really like that sequence, that double top, signs of exhaustion, run those stops, and then grab that channel as we dump it back down to retest those lows. Right? Makes sense? Okay, last thing here right now on the E-mini, and we'll make the move over to the oil. Let's say, for example now, right? Maybe we get that V-top, that pop and grind, right? Maybe it's a pop and grind that dumps back over. Maybe it's a double top reversal, right? And back over. Let's say now we find our way back into that low. Okay, how do we buy it now as we go higher? Okay, a lot of this has to do with the strength of the market as it goes lower. Okay, so for example, if we see a really strong move down here, we have to expect a retest of that low. If the market makes a real strong move down, there's two ways you want to buy it. One is a crown reversal. Okay, it's basically a one try for the bears. It's a two try for the bears. Remember, sellers want to sell high, so higher highs, right? Higher highs as they come in, and then think about where that trap is, and that's going to be your way to buy it off. Well, one way, right? One way to buy it off of that low. Remember, in this example, it's a very strong move down. Okay, anytime we see a strong move in one direction, we expect what? A pullback and a retest. So I don't want to get too aggressive on that reversal. I know we're at major support. I know there's a range above us, right? But again, you really got to be careful going against short-term momentum, right? Again, I realize the bears have it there, but let them try once, let them try twice, and grab that trap. What is a whole lot easier to make money with is if we do see that strong move down, let the bears come in and let them sell that and back down and retest the low. Once they retest the low now it's so much easier. Now the bears, they got their money out of the market. Now the rookies come in, right? Let's see signs of exhaustion. Remember, looking for reversal here, right? Signs of exhaustion, two try rule. Think about where those stops are. And we can now light those stops up, right? Now this can be a lot more aggressive on these ones. Okay, this is a two try failure. We don't need a trap entry because we've already got the retest of that low. It wouldn't hurt, right? If we came down and got that trap below that low, that certainly wouldn't hurt. So don't be afraid of that one if you get that. But that's called a two try failure. And then again, as we go higher here, right, double check any trend lines coming down. If not, we'll find that new trend line across the high, find that channel across that low, and then look for that pullback. And again, I'm calling a pullback right now. I'm keeping it simple right now. This could be a trap. It could be a failure. It could be a pullback combination. I mean, again, this is a 10,000 tick chart, right? So be looking for those entry patterns you learn in the free trading course. We'll look for those off the low of that channel. And then where do we want to go? It's going to want to go back into that range. It's going to want to rotate and take out some of these prior highs, the amount below, the amount above, right? So same basic idea there, right, as we potentially go back up in the opposite direction. So keep that in mind, right? So if we do end up getting this thing really, really strong here, let it retest. I'm not a huge fan of that short right there because you're at support below a range magnet above you, but kind of let those bears come in, let them try to short into it, right? As they come in and try to do it again, 1, 2, their stops are a sit and duck right back up into that trading range. All right, guys, those are the most obvious trades I see for tomorrow. I'm sure because we have a Fed announcement coming on Wednesday, there'll be something I might have missed tonight. The market will lose something I don't quite anticipate in tonight's video. So that'll give you a good reason to come out and join us and trade with us tomorrow in our trade room because obviously we'll have this stuff running in real time tomorrow. It's a great place to come out and learn and trade along. NASDAQ's done. S&P's done. Got a pretty good game plan here now to make some money tomorrow. Let's finish finish it up now on the crude oil or the USO, right? We got a bunch of ETF counterparts on the oil. Now, I mentioned earlier we might hear from OPEC tomorrow. Keep in mind, oil is a very news-driven market right now. So we are unfortunately very susceptible right now on oil to any headlines that come out of the Middle East, any headlines come out of OPEC nations, really any headlines right now that apply to supply of crude oil. So keep that in mind. Right now, though, there are three basic key insights on this 1500 tick chart for oil futures. First one is a strong move higher. Why is it important? Because we expect a pullback and a retest of that high. Once they get that retest, right, we expect either a breakout going higher or a double top reversal. I mentioned this earlier. I'm not a huge fan of that double top reversal. Okay, and that is because, well, you'll learn in a moment. Second one here is a pop and grind. My favorite dance move. I'm kidding, obviously. Pop and grind. We pop up, we begin to grind and go higher. We talked about these before in the opposite direction on the Nasdaq tonight, I believe it was. Why is it important? Well, because now I can draw a trend line off the high. I can bring that channel down at that low, and as I've said repeatedly on this video, pretty much every chart tonight, look left, find some prior swings, and get it buying, right? It's a great place to be a buyer. Now, you'll notice I made note on this. It's a relatively wide channel. Now, why would that be an important clue? Well, because the wider the channel, the deeper the pullback needs to be, right? And the deeper the pullback needs to be, the more momentum will build for the bears. So for example, I think I mentioned this last week, right? If I have a real steep channel, if my channel is real steep with a pop and grind like this, if it's really, really steep like this, I can be pretty aggressive with a trap off that low, right? Because again, there's not much of a pullback there. But the minute this thing starts to look more like this, the minute this thing starts to go more like a 45-degree angle, that pop and grind like that, now the problem is that pullback's pretty deep. And because of that, we have to anticipate that with a strong move lower, there's more chances, there's more probability, there's more likelihood of another leg lower. Okay, that's again that short-term momentum I keep on preaching about on these videos. So that's what I have to be concerned with. That's what I have to be worried about on this type of situation right now. You're more than welcome to grab that trap and just give it a rip, right? That is definitely a good spot for a trap. It's not my favorite example though of a pop and grind channel where a trap would be very useful. Okay, now, if we do keep going higher and this channel was to become a little bit steeper, absolutely. But as of right now, though, it's a relatively deep pullback, and that tells me I have to anticipate bears coming in, which you can probably already anticipate means looking for a failure right off of that low. I'd love to anticipate those bears coming in, trap them in below the moving average, and then try to buy into those stop losses. And then you have the third clue. The third clue is the biggest reason why I'm not a huge fan of a double top reversal on the oil. Okay, if you look a little bit wider here, you'll notice we're coming out of that big range from pretty much the end of last week, and it pretty much bled over into today's trading session. Now, do you remember what I mentioned earlier? The amount we go below a range is oftentimes symmetrical to the amount we go above the range. So we talk about these quite a bit on these videos. We see a lot of times where you'll see a bear market into a trading range. The price will jump lower. For whatever reason, it can't hold the breakout. It snaps back up into that range. Then, remember, think about this now. Ranges are balanced areas. So what goes below the range oftentimes will keep on going, right? And usually pretty strong because, again, that momentum will turn. Okay, so the amount we go below, the amount we go above, that area up there. But think about it. If this market ends up running higher here, this is a hell of a strong bullish momentum, right? Again, there's that short-term momentum. So I'm not a huge fan of the short at that point, right? I will take it eventually, but I'm not a big fan of trying to go lower and then looking for a double top reversal right there. It's not a very good trade. right? Because again, you're basically hoping that the market does not continue its rotation to the opposite side of that, what I call the pendulum swing. The amount we go below a range will oftentimes keep on moving to the opposite side equal, right, above the top of that range. That's why being a bear right here, I'm just not a big fan of. So I would anticipate here this market could easily pull back and really rip going higher, or potentially go higher here and then give us that pullback, right, later on in the move here. That's what I want to be ready for tomorrow, and that's what I want you to be ready for to make some money as well. So a couple things here now as we pull back. As we pull back right now, watch out for those bears to come in and try to sell this thing short. Once they do, the stops are the easy gasoline, right, which fits very well for the topic of crude oil, but a failure into a pullback combo. Now try to get that pullback combination entry, try to get that pullback underneath the low of this range. Okay, in our advanced classes here on the website, you'll learn about some advanced entry techniques to help you avoid trading inside of any big area like that. So kind of keep that in mind there as you go. I would also imagine too, if this market was to really pop lower here, like real strong pullback right now, as you can see, this market's a bit jumpy right now. If that's the case, don't be afraid to go a little bit more cautious and go to a 2-try failure, 1 and 2, right? So a good rule of thumb is if we end up underneath that channel, right? If we end up underneath that channel, bears will come in and try to short off the underbelly of that channel. And so think about 1 try, 2 try, and then again, use their stops, because at that point, it's not a reversal yet. It's just a sharp pullback. At that point now, we can use those stops for that run going higher again, right? Makes sense? So keep that in mind. Now, if we were to pull back, and this thing ends up grinding and going lower here, it's very similar we talked about on the Nasdaq and the S&P, right? So find that low, find that high, and then again, think about looking left, find those prior swings. At that point now, trap, failure, pullback off the high there. It's pretty obvious at that point. If they pop and grind lower, there's a very good chance there's money to make off the high of that channel. And then again, where they want to go, they want to take out that low at 81.73. So kind of keep that in the back of your mind there as well as we go here. What if we go sideways here, right? What if we go sideways? If we go sideways here, not a lot changes. Remember, that range, the more we stay inside that trading range, the more that range becomes a magnet. So simply wait for the market to pull back now, trap in those bears again. Not a lot changes, right? Get that failure. The only thing, again, you want to be careful with is on that pullback follow-up, right? The failure is pretty easy. The pullback follow-up, just make sure you're getting into that before you go back into that trading range. And if you want some kind of more advanced tactics to do that, I cover that in my advanced classes here on the website here at School of Trade. I'll put all the links for those classes, by the way, inside of the description of this YouTube video. The next one here is what if we go higher? This is very similar we talk about on the Nasdaq and the S&P. Not as important though. Well, remember, on the S&P and the Nasdaq, we have that long-term bear bias, and so as the market goes higher on the S&P and the Nasdaq, we've got to be a little more careful and patient as we go higher. But if this market, for example, right, was to keep on grinding up here right now, not a lot changes. I'm going to keep drawing that channel off those highs. I'm going to bring it down off that low. I'm going to keep looking left and finding prior swings, trying to get underneath those prior swings for a trap, get underneath the 21 moving average for a failure, and then of course back above the EMA for a pullback combination, right? So trap, failure, pullback combo. Definitely take a good chunk of this off at that high. And then again, I'm not a huge fan of that double top reversal, because at that point now, the buyers are probably going to start making their way up around that 88.62, 89.71. Now, let's say this market was to really jump higher overnight. Okay, really jump higher overnight. Again, news comes out, news driven. I don't know. Let's say it happens though. We strong move up, shallow pullback, higher high in price, right? And that trap as we go. Okay, so real strong pop up, strong move, shallow pullback, higher high in price, trap. Okay, that's the most aggressive I want to be as we go higher. Then think about now drawing a bigger channel across those highs, down off that low, getting one more deeper pullback, trapping in those bears with that failure, and back up to retest the high. At that point, once we start to get those retests and we're way up, right? We're way up, way above that trading range. That's when we start thinking about that 1, that 2, and that double top reversal that I talked about on the S&P chart, right? So we've got to be very careful, again, being too aggressive, shorting this thing as we're going higher. But if I can get this thing to pop up, nice big pop up, nice deep pullback, I like the long side to retest the high. And then once they do retest the high, then we start trapping in those weekend buyers at a major turning point, signs of exhaustion, and then run those stops as we go lower. So 2, try failure off that high, and then again, find that new channel, and we're looking for that short off the top of that channel. All right, the range back at 85 makes for an easy target, right? Just keep that on your radar for tomorrow. All right, guys. Speaking of tomorrow, too, don't forget, 8 o'clock Eastern time, we'll be reopening our morning trade room. Hoping to see you there trading right along with us. Don't forget, if you're looking for a great place to come out and learn and trade along, if you're missing too many good trades right now, if you're making too many mental mistakes, or you're taking too many losses, what are you waiting for? Come out and join me every morning in our trade room. It's a great place to be every morning. I'll put the links you guys need for the free classes, for the membership classes. I'll put them all in the description of the YouTube video. I would definitely recommend, if you're here for the first time right now, grab the free trading course, learn the basic strategy, get the ball moving with that, and then that way you'll be ready to go for trading with us sometime soon as a new member of our morning trade room. Okay, guys, so tomorrow morning, as a student of mine, I'll see you there 8 o'clock Eastern time. We'll trade this stuff together. Everyone else, grab that free class, learn the basics, and I'll see you guys in the trade room soon once you learn kind of the basic fundamentals. Any questions, don't be afraid to call the office. I know I go pretty quickly here on these videos, but we'll slow it down. Make sure you have all your questions answered. Make sure you know kind of the best brokers, the best data. We'll make sure we get all that taken care of on the phone. Don't be afraid to use that live chat button as well, or drop me a question in the comment section. I can always help there as well. The fastest way to get help, though, is to call the office. We're always here, or use that live chat. That's the easiest way to get help with any of our trading classes or to get access to our trade room. All right, guys, have a fantastic evening. We covered a lot here tonight. Let me know if you guys have any questions in the comment section below, and I'll see you guys tomorrow morning, 8 o'clock Eastern time. If not tomorrow morning, come back and see me tomorrow night. We'll rewind, do it again, and get ready for what could be a very wacky Wednesday as the Fed announcement hits on Wednesday afternoon. All right, guys, my name is Joseph. Thank you so much for tuning in and watching all the way to the end. Now have a good evening. Rest up. I'll see you tomorrow. Be well. Be nice to each other. And be here tomorrow, guys. Adios, amigos. Bye-bye for now.